Hello and welcome to FinextraTV. I'm Hannah Wallace and joining me now is Erin Platts, CEO of Silicon Valley Bank UK and head of EMEA. And we're talking about the innovation economy and the arrival of Silicon Valley Bank in the UK. Erin, it's lovely to meet you. Thank you very much for having us today.
Well, thanks for having me, Hannah. Nice to see you.
Really good to see you. And now we've been following the growth of Silicon Valley Bank for some time, and we're speaking today because you fully arrived in the UK, which is a really exciting announcement. Still, you've been active in the UK since 2004, I believe. So
Yes.
In that time, can you tell us, how have you seen the innovation economy grow?
Yeah, it's been absolutely amazing to see what was a really exciting but small and fairly niche market in the UK and broader Europe in terms of innovation grow into I would say, the powerhouse that it is today. I moved over here in 2007, and at that time, there was really exciting sort of innovation on the ground in terms of some companies, some capital, some really huge success stories, but not nearly at the size and scale as that we have today.
Mm-hmm.
So if you sort of fast forward 15 years later, the breadth and depth of capital available, the diversity of subsectors that we are not just creating in terms of companies here, but scaling, and the sophistication of the teams, the investors, the influencers around the innovation economy is really, really exceptional. So of course, we saw 2020 and 2021 being breakthrough years in terms of activity levels. This year, first half, we've seen a little bit of a depression in terms of year over year, but still so much to be excited about and a lot of great things happening on the ground.
Some really exciting developments there. And now I understand the bank has recently completed the subsidiarisation process. So tell us, what does that mean and what's next for the bank?
Right. So as you said, we've been active here since 2004. We came to the UK. We were pulled by our US clients that were using the UK as a jumping off point into the UK and broader Europe. A lot of our venture capital and private equity friends were making investments here. So we set up shop 2004, and we started as a small lender. Mm-hmm. And then in 2012, we got our banking license as a branch, which is a really efficient way to come to market. And fast forward again to a couple of years ago, we got to a spot where our growth and the size of our business in the UK dictated that we needed to go into the subsidiary process, mm-hmm. which in effect is a reg requirement, but really allows us to invest heavily within the region. So this is really us planting our flag within the UK, having that team and base, that balance sheet, the separate legal entity, the separate board of directors, to be able to really scale with our clients in the region. So what was driven by reg requirement in terms of our growth has really turned into a really exciting opportunity for us in terms of really being able to invest in the region and scale from here.
That's right. So let's talk a bit more about your clients then. Tell us, what's the current climate that your clients are seeing today, and how is that broad range of customers that you have coping with those conditions today?
Sure. I think probably just to recap, our clients, we focus exclusively on two sectors, right? The innovation economy. So these are everything from really early stage startups, mm-hmm. through to venture private equity backed companies and venture public and private corporates. And on the other hand, we work with, let's say, sources of capital. This is mainly venture capital firms, private equity firms, corporate VCs. And that's all that we do. So whereas a lot of other maybe high street banks, money center banks are what we would say a mile wide and an inch deep, we are absolutely opposite. We are hugely focused on these two sectors. Now, the way that this, let's say, basket of clients that we work with, mm-hmm. has been affected, I would say has been probably more significant than the long tail, mm-hmm. of clients that maybe other banks work with. So if you think about the interest rate environment, the inflationary environment, the way that the public markets have been hit substantially, we've seen that trickle quite quickly into the private markets. That's showing up by way of venture capital and private equity rounds being a little bit slower than they were in the 2020 and 2021 levels. Valuations have absolutely been suppressed. Mm-hmm. But this isn't necessarily a bad thing. We were coming off of what has been, I would say, an exceptional year in 2021 by many measures, levels of capital, valuations, velocity of deals, and actually having a bit of a recalibration and some of our clients and investors getting back to basics is a positive thing from our perspective. And really what that means is there's plenty of capital available. A lot of our companies are taking, I would say, a more prudent approach to managing their liquidity and cash runway, but we're still seeing a really healthy level of volume at the early stages and really through the private equity side as well. So again, companies are being a little bit more cautious as opposed to concerned. We will see some businesses probably not make it through this recalibration, but we're hopeful even in those circumstances that recycling of talent and experience will leave us in a stronger place in terms of a local innovation economy going forward.
That's really interesting. Thanks for setting the scene there, Erin. Let's come back to innovation. So looking beyond the funding and financial services, how can banks such as yourself drive that innovation and also increase value?
Yeah, this is an interesting question. And let's face it, a lot of banks, financial services companies are increasingly commoditized, right? So how we differentiate ourselves is really about the how we support our clients. And a lot of banks are taking a different approach, right? Some are innovating through product, through ease of onboarding. We're trying to do that, and we're trying to really create a moat around value add. And what that means for us is a lot of times our clients, they have very common issues around scale. It's about access to talent. It's about access to markets. It's about access to capital. And because we're so laser focused on innovation, and we've set ourselves up to be deep sector experts in enterprise software or fintech or biotech or healthcare services, our employees are able to sit down with the founding teams and say, how can we help? And again, that would manifest itself into introductions to, let's say, sources of capital, a VC, who get to know the companies really well, or perhaps they're looking to transition their CFO as they raise that next round. We can, match make on that side as well. And of course, one of the things that we love doing is putting together our clients for partnership or commercial arrangements. So it's really that connectivity that we've been able to build that I think really differentiates Silicon Valley Bank, and where I think a lot of other financial institutions are heading as well.
Well, following on from that quite nicely then, I know that Silicon Valley Bank is recognized as an advocate for diversity, equity, and inclusion. But my question there is, why is diversity so crucial within the innovation economy and financial services as a whole? What about that?
Yeah, I mean, we sit at the nexus of innovation and financial services. And let's face it, two sectors that haven't historically been all that diverse. So we see firsthand how much opportunity exists to drive unbelievable results, financial results, as well as just doing the right thing, right? So in terms of SVB, we look at it internally and externally. So how can we create the most diverse, inclusive, equitable environment to allow our employees to flourish, right? The war for talent is real. So if we can create that environment and retain our talent, it works for us, it works for our clients, and it's a really fun part of the job. And me working at SVB, having this role is a real privilege and one that has a lot of responsibility, and that responsibility is something I take really seriously. And then externally, again, if you look at the data, it's dire in terms of the amount of capital flowing into overlooked founders. And that could be gender, that could be socioeconomic, that could be ethnicity, sexual orientation. It's less than 2% globally, right? And the number is not increasing. Imagine if we could change that equation, how much more growth, how much more social mobility, how much more innovation we'd be able to bring across the UK and European economy. So there's a huge upside, and it's again, it's something that really aligns with our values at SVB in terms of making a difference, and also working with some great partners externally who are really committed to solving this issue as well.
Brilliant. Well, that's a really strong and positive note to end on there, Erin. I'm really looking forward to seeing what's next for Silicon Valley Bank, but we'll leave it there for now. Thank you very much for inviting us to speak with you.
Thanks for coming.